What if I told you there might be a way to raise hundreds of billions of pounds for Britain without permanently taking a penny away from the country's wealthiest families? A way that could help fund public services, reduce government borrowing, and avoid many of the problems associated with a traditional wealth tax. Now, before you start typing angry comments, this isn't a video attacking rich people. It's also not a defense of billionaires. It's simply an attempt to ask one question. Is there a smarter way to finance Britain? Let's get into it. One of the loudest voices calling for change is economist Gary Stevenson. His argument is relatively straightforward. Britain has become increasingly unequal. Asset prices have exploded. Property, shares, and businesses have become worth far more than wages have grown. Meanwhile, governments continue borrowing increasing amounts of money just to maintain public services. Gary argues that the ultra-rich have benefited enormously from this system, and therefore should contribute more through a wealth tax. Supporters believe this would reduce inequality and raise billions for the Treasury. Critics argue that wealthy people would simply move assets abroad, leave the country, or find legal ways to avoid paying. Whichever side you're on, it's a fascinating debate. But I think there's another way of looking at it. Every country operates under an unwritten agreement. Most of us work, we pay income tax, national insurance, VAT, council tax, fuel duty, stamp duty. The list goes on. In return, government provides things that individuals either couldn't provide themselves or would struggle to organise collectively. The NHS, schools, roads, police, street lighting, defence, rubbish collections, courts, fire services. The idea is that everyone contributes according to the rules, and everyone benefits. For most people, this arrangement makes sense. But here's where my question begins. Imagine you've built a company worth hundreds of millions. You already pay for private healthcare. Your children attend private schools. You have private security, private pensions, private wealth managers, maybe even private transport. From that person's perspective, what exactly are they receiving in exchange for paying even more tax? Whether you agree or disagree with that viewpoint isn't really the point. If politicians want a policy to succeed, they need to understand incentives. Because people usually respond to incentives. If someone feels they're simply losing more money for services they don't personally use very much, they'll naturally look for ways to avoid that outcome. That's simply human nature. On paper, wealth taxes sound simple. Tax people with over £10 million, raise billions, fund public services. Problem solved. Except, reality is usually more complicated. Wealth isn't the same as cash. Someone may own a business valued at £50 million, but they don't necessarily have millions sitting in a bank account. To pay a wealth tax, they may have to sell shares, borrow money, or restructure ownership. Some wealthy individuals might relocate before the tax even arrives. Others may move assets overseas. Some would undoubtedly pay. Others would legally avoid it. That's why wealth taxes have produced mixed results around the world. Instead of permanently taking wealth away, why not temporarily borrow it? Imagine everyone with wealth above £10 million was required to purchase a long-term government prosperity bond. For the sake of discussion, let's say they invested 10% of their total wealth. The bond lasts 45 years. The government pays 9% annual interest. But here's the interesting part. That interest is taxable. If 6% of the interest is effectively returned to the government through taxation, the investor keeps around 3% after tax. The government gains long-term access to a huge pool of capital, and after 45 years, the original investment is returned. The family's wealth is preserved rather than permanently reduced. This isn't a wealth tax, it's compulsory long-term lending to the government. Think about how wealthy families often plan. Many don't think in terms of 5 years, they think in generations. If they know their capital eventually returns to their children or grandchildren, that may feel very different psychologically from seeing wealth permanently disappear through taxation. They still own the asset. They're simply lending it for a long period. In theory, this could reduce opposition compared with a one-off wealth tax. The UK constantly borrows money. Every year, the government issues gilts to investors around the world. Why? Because government spending exceeds tax revenue. If Britain could access a large, stable source of domestic capital, it might reduce dependence on international investors. It could potentially fund infrastructure, energy projects, housing, technology, transport, hospitals, schools, long-term investments that hopefully improve productivity. The government would also know exactly how long that money remains available. 45 years provides remarkable certainty. Of course, this idea isn't perfect. There are serious questions. How do you value private businesses? How do you calculate someone's total wealth accurately? Would investors simply leave Britain before the policy starts? Would such a compulsory bond discourage entrepreneurship? Could governments be trusted not to change the rules halfway through? And where would the government find the money to repay all those bonds decades later? These aren't small issues. They would need detailed answers. Personally, I think it deserves serious discussion. Traditional wealth taxes focus on redistribution. This proposal focuses more on financing. One permanently transfers wealth. The other temporarily borrows it. One creates an immediate loss. The other preserves family capital, while still providing the government with significant funding. Would it work? Maybe, maybe not. But I believe it's worth debating. Because Britain clearly faces difficult financial choices. The national debt is high. The population is aging. Healthcare costs continue rising. Infrastructure needs investment. Simply pretending these problems don't exist isn't a solution. Whether you're left-wing, right-wing, rich, poor, or somewhere in the middle, most people agree on one thing. Britain needs sustainable public finances. The real question isn't simply, should the rich pay more? It's, what's the smartest way to ask them to contribute? Perhaps that's through higher taxes. Perhaps it's through a wealth tax. Or perhaps the answer lies somewhere entirely different. Maybe compulsory long-term investment, rather than permanent confiscation, is an idea worth exploring. I'd genuinely like to hear your thoughts. Would you support a traditional wealth tax? Or do you think a government prosperity bond like this could be a fairer solution? Let me know in the comments. And if you enjoy discussing economics, investing, and the future of Britain, don't forget to like, subscribe, and I'll see you in the next video.